Okay, yeah, so we back. Alright, now, as I said in the previous video, I'm going to take my time to explain this strategy to you. Now, first of all, what I want you to understand is that we are using the 5 minutes chart. Alright, so make sure that your candlestick chart is on the 5 minutes chart. That's first of all. Now, this strategy works on any currency choice, but usually I prefer Euro USD, but you can choose any currency choice of yours. But just make sure it is on the 5 minutes chart. That's what's most important. Make sure it's on the 5 minutes chart. Alright, that's the first aspect. Now, the second aspect is, first of all, make sure you identify a 3 inside down. Now, the 3 inside down is the first pattern you're supposed to identify before considering any other pattern. So make sure you identify the 3 inside down. And the 3 inside down forms when a bullish candlestick forms first, followed by a bearish candlestick which opens. It could be outside the body of the bullish candlestick, but it's supposed to close within the body of the bullish candlestick. Now, once that forms, you don't take any trade. You just wait for another bearish candlestick to form. Now, when that also forms, it's supposed to open within the body. Whereas in this case, it's opening right within the body of the bullish candlestick. So it's supposed to open within the body of the bullish candlestick. Now, it could close outside the body of the bullish candlestick, or it could close within the body of the bullish candlestick, like it has in this case. Now, when that happens, you draw your first line. Now, you pick a line from here. That's how you pick a line from. So you draw your first line, and then once you get your first line, this is just to give you the rate or the price at that point in time, or at that when that particular pattern formed. You always want to get a rate when that pattern formed. Now you add 150 pips to that rate. So when you add 150 pips to that rate, you draw your second line. So the distance between this first line and the second line is 150 pips, and that's what I illustrated earlier on in the previous video. Now this, so you add 150 pips to it. Now 150 pips in this case, for instance, let me get my calculator again. Now the rate is 1.08957. So if you add 150 pips to it, it's going to be 0.00150. Alright, 150 pips, you add 2 zeros after the decimal point, and then you add the 150 pips. So you end up getting 1.09107. Now that is the second line right here, as you can see. So the gap between the second line and this first line is 150 pips. Now once this forms, alright, you then wait. Remember, the market is moving this way, alright? So what you do is you then wait, alright, for the market to move and to form another bearish reversal. Now the bearish reversal that the market forms about this second line, alright, is a confirmation signal that the market is going to go down. So what we do in this case is we wait for the market to form a bearish reversal. Now it then formed a bearish reversal, but it's supposed to form a bearish reversal above the 150 MAC candles line, 150 MAC line. So now when we draw our line, we wait for the market to form a bearish reversal. Now you notice that once it crossed there, it formed a bullish candlestick and it formed a doji, but it didn't form a bearish candlestick. So therefore, this is not an abandoned baby. This is not an abandoned baby. So you ignore it and you don't draw your line to it. So you then wait for a bearish reversal to form. Now in this example, and a 3 inside down formed. So you can see that a bullish candlestick formed, followed by a bearish candlestick, which opened and closed within the body of the bullish candlestick. followed by another bearish candlestick which opened within the body of the bullish candlestick and closed outside of the body of the bullish candlestick. So when that forms, you then draw your third line. Alright, now when you draw this third line, what you do is you then wait for the market to move against this third rate or this third price by 50 pips. Am I making sense? By 50 pips. So now in this case, the rate is my calculator is again 1.09180. Right? So we'll wait for the market to move against it by 50 pips. The 50 pips will be 0.00050. Alright? So that's 3 zeros. Alright? After the decimal point and then 50. And then we get 1.09230. So in this case, this is where it forms right here. Now when it forms right here and then you draw your line again for this particular one, right, you do not take your trade once you draw the line. What you do is you will now wait again for the market to form another bearish reversal, which could either be an abandoned baby, a bearish reversal, or an abandoned baby, a 3 inside down, or a 3 outside down. In this case, it's formed another 3 inside down. So now it is at this point I'm gonna take a trade. So now what you do is you take a trade immediately the last bearish candlestick for the pattern, that is this particular pattern, closes. This final pattern closes. So we needed 3 patterns. We needed the first pattern, which is the original 3 inside down. We needed a second pattern confirmation, which is supposed to be above the 150 mark candlestick. Then we needed a third pattern, which is supposed to be about the 50 pip away, 50 pips away line. Now once that also forms, that is the third pattern. We need 3 patterns. We need 1, 2, 3. So the third one is the confirmation one. So we take a trade based on the third one. So we take a trade the moment this one closes. We take our trade. Now what you should notice is you're supposed to hold a trade for the next 5 hours. Whenever the 3 inside down pattern forms, which is this is supposed to hold a trade for the next 5 hours. So now in this case, you will notice that it opened at it closed here, right, at 11:30. Now one other thing I need to make clear before I move forward is that this is a 5-minute chart. So this particular candlestick, as is showing right here, that it is 11:30, right? It is not. It is rather the 11. It's rather closed at 11:35. The 11:30 is only showing you when the candlestick opened, but it's actually closed at 11:35. So in taking your trade, when you go to your broker site, okay, your broker site, what you're gonna choose is an expiry time in the next 5 hours, and the next 5 hours is going to be 16:35. But on the MetaTrader 4 chart, it's going to show as 16:30. So the next 5 hours will be 16:30. So this is 16:30, as you can see right here. This is 16. So this candlestick is a 16:30. The 16:30 candlestick. All right. So when you go to a broker site, you're going to choose 16:35 because when this forms, even though the time is showing 11:30 right here, it's rather going to close at 11:35, and even though this one is showing 16:30 right here, it's going to close at 16:35. So when you go to a broker site, your expiry time is going to be 16:35 because the opening time here is 11:35. That's in real time, but on the chart it's showing 11:30. So you go to a broker site, and then over here also it's also showing 16:30. That's the next 5 hours. Now let me show you what happens in this case. Now let's take off all the other lines, and then let me show you what happens. Okay, so we're taking off all these other lines and then showing what happens. Now when we enter the trade at this point, now look at what happens. We enter the trade at this point and the market closed here. So what do? We win the trade. We enter the trade at this price, but the market closed at this particular price. Alright, so you notice what happened? We won the trade. We chose a put. We're going to choose a put, a down, right? We're going to choose a put. So we entered the trade at this point, and the market closed at this point. Because this is the next 5 hours. This is where we took our trade. This is where we started the process, right, at 11:30 candlestick, and then it closed at the 16:30 candlestick because we hold the trade for the next 5 hours. Okay, so you know that 16:30 candlestick, this is very close. Now it closed at this price, so we win our trade. Very good. Now this should tell you one thing, that in binary options, the trend does not matter much. What matters the most is the movement in pips. Alright, the movement in pips is what matters. You don't need a trend. The trend doesn't really matter much. All that you need is the movement in pips. So once you are able to enter your trade, assuming you're choosing a put, and you're able to choose an entry price very high, a very high entry price, you are likely to win your trade most of the time. Alright, so that's how it works. So in binary options, we don't care much about the trend. What we care about is about entry rate and the pips. So make sure you get the right entry rate, and then make sure at least where you're entering at, and in case the market should even range and does not even does not trend in rather ranges, you still enter the right price in order to be able to win. So you can see yourself making $20, assuming you invested just $25 per trade. You make a profit of $80, 80%. So you could make yourself $20 just by taking this trade alone. You take it at this point, and what did happen? It closes at this point, so you then make your money. You win your trade. Very good. So that is how it works. Okay, so that is how it works. Now if you have any difficulties understanding the strategy, you can just leave a comment in the comment section below, and then I will assist you with any difficulties you're having. But generally, this is how the strategy works, and this is how best you can benefit from it. Alright, just follow the steps. If you have any difficulties, just go over the video again, and then you get to see how everything is done step by step in order to arrive at your entry price, and then how long to hold the trade in order to make the maximum benefit or profit out of it, rather than just holding for any time frame and losing out of it. I have done a test, and it shows that holding for the next 5 hours, that's assuming this forms first, and holding for the next 5 hours works. So it's best to get a first point and then look for the end point, and then can determine how long you're gonna hold a trade. So that is how it works. Very good. Alright, so in the next video, I'm going to show you and take you through the things you're supposed to do and you're not supposed to do. That the do's and don'ts in order to make this strategy successful. Alright, so hop on to the next video, and then let's continue the training from there. Alright, so I'll see you in the next video.